السلام عليكم. صباح الخير. مرحبا بكم في هذه الجلسة الاستثنائية لمناقشة النتائج المالية لشركة تاجير للتمويل عن الفترة المنتهية في 30/6/2024. سنناقش في هذه الجلسة النتائج للستة أشهر الأولى من العام 2024. Good morning and welcome to everyone. In this sessions, we are going to discuss the result of Taageer Finance for the first 6 months for the period from January till June 2024. And after the discussions, inshallah, after the presentation, Mr. Kashif will take us through the presentation, and after the presentation, we are expecting all the questions and the answers will happen after the presentation, inshallah. So now I will introduce my colleagues who are sitting with me here, Mr. Fad, Chief Operating Officers, and Mr. Akhtar is a Manager Finance, and we have Mustafa, Investors Relation Officers, and Mr. Musa, Head of Finance, and Mr. Kashif Yaqub, the Deputy CEO. Mr. Kashif, he will take us through the presentation, and at the end of the presentation, inshallah, we will answer all the questions. Please, Mr. Kashif.
Thank you very much. Good morning, ladies and gentlemen. I'd like to take you through the presentation, which is the MSX discussion analysis for the first half of 2024. For the presentation theme for this year, we have chosen this Oman's Bright Star, which is we are celebrating the Oman's young achievers. Every year we decide on a theme, so this year theme is about the youth of Oman. We'll be covering 4 areas in this presentation: the company overview, performance highlights, key indicators, and notable initiatives. A brief background of the company. The company was established in 2000, and this is the second largest finance and leasing company in Oman. Its head office is in Muscat, and we have 8 locations in Oman. The company was listed in Oman Muscat stock market in 2005. You see the progress of the company from becoming 4th largest to 2nd largest company over the years. And there are some recent achievements. The company has been awarded as the best non-banking finance company during this year, and the CEO has been awarded the best CEO of the year. Then we have mentioned the shareholders breakup. This is the highlight of the profit and loss statement. If you see then almost on the accounts, the company has performed very well. The revenues have increased by 15%. The operating profit of the company is up by 19%. The net profit of the company has increased by 36.6%. The provisioning during the same period, if you see as compared to last year, is up by 8.3%. The profit before tax is up by 36.5%. In terms of the statement of financial position, if you see that the company's total assets have increased by 7.5%. The company has a cash balance at the half year of 17 million, which is a testament to show that the company can easily repay its bond obligation, which is due in November. In terms of the portfolio, if you see the net investment before provision is 271 million, which is up from 246 million same time last year, which is 10.2% up on a year-to-year basis. The total borrowing of the company is up by 8%, and the total equity of the company is up by 7.5%. Now, in next few slides, we'll show you the key performance indicators of the company. We see that the portfolio of the company has shown a CAGR of 16.5% from 2021, which shows a very fast recovery and faster than the industry growth during the same period. The market share of the company has gone up from 18.7% to 22%. The provision of the company, which was around 47.8% in 2021, has gone up to 72%, the provision coverage. And as regards stage 3 ECL coverage, it has increased from 41.6% to around 54% as on June 30th. In terms of revenue, if you see as compared to year-on-year, December to December, the revenue was up by 26%. June to June, the revenue was up by 15%. The revenue per employee of the company has increased from 123,000 to 185,000 per employee. Cost to income ratio, if you see, has reduced significantly from 45% to 36.5%. Operating profit on a year-on-year basis, June versus June, is up by 19.3%, whereby the net profit is up by 36.6% on a year-on-year basis. Earning per share of the company, as you see, is up by 43%. And in terms of June to June, it's up by 33%. Dividend payout of the company, if you see, has shown a significant improvement from 4% to 9.75%. The return on average asset has shown an increment from 1.4 to 2.1%. And now, June, you see it's slightly down, but on an annualized basis, if you see, so we expect that this to be improving in the future. Same, the return on average equity is up from 5.9% to 9.9%. And again, on an annualized basis, by end of the year, we expect this to increase further. In terms of notable initiatives, Taageer philosophy is that we don't see digital in isolation with our customers. So every initiative in terms of the digitalization we take, the focus is on how we can benefit the customer. So here we have just mentioned few initiatives. Loyalty program. Last year, we started the loyalty program for our retail customer. This year, we started our loyalty program for our corporate customer, which is branded as Mumayyas. And we issue these loyalty cards to these customers. This year, another initiative we launched is Suq Taageer for our existing customers. Also, we have entered into multiple partnerships with other banks, in which includes the B2B payment solution, direct debit services, and API integration. Then we are already into the version 4 of our mobile app. We have launched 3 versions of the app, and we are into version 4.0 of the app. Then we have launched the digital loan application, whereby end-to-end we have started receiving the application and approving the loans through digitally. Then we have literally minimum cash collections. Through our point of sale network and mobile app, we are collecting all the payment which are not received through the checks. Then we have an AI-based chatbot which we launched this year also, and this has multiple layers on this for providing different services to the customers. Another key initiative for Taageer is that if you see that from in 2019, there is a lot of concentration of the company's funding on bank borrowing, which was 89%. And over last around 4 years, we have reduced significantly this to 64% by diversifying into new funding avenues, which are bonds and deposit. Bonds, you see, Taageer has successfully, during last 3 years consecutive, issued 3 bonds, through which first bond it raised 13.2 million riyal. It was 132% subscribed. Second bond we raised 14.6 billion riyal, and it was 146% subscribed. And third bond we raised around 15 million riyal, which is around 150% subscribed. Similarly, in terms of corporate deposit portfolio, which was at a bare minimum of 9.8 million in 2021. As on June 30th, we have increased this portfolio to 42.6 million. Now, these are not just the number, but they prove that the investors in the market have trusted Taageer's story and progress during last few years, and they've seen how the company has grown and how the company has made itself strong and faced the competition and the challenges posed by COVID. So the company has informed this and told the story to the investors, and they have trusted on the company in a big way. Thank you very much.
Thank you, Mr. Kashif. Now, please, if there is any questions, we'll wait for a minute. Please.
Hello?
Yeah, please. Good morning.
Hi, good morning, team. Thank you for the call. Congratulations on the good set of numbers. Just a couple of queries. You spoke about how you've changed the cost of funding predominantly from bank borrowings towards issuing some bonds, and now the mix is a bit more sort of diversified. Now, if you could just compare the cost of funding for a bank versus the deposits, I would imagine the deposits are obviously a more sort of pricier item to sort of service, right?
No, when you go to the pricing, I don't think it is, yeah, you mean it's expensive more? No.
Yeah, if I look at your bonds, one is at 7% that matures this year, and the 2026 bond is priced at 7.5%, right?
But you have to take the average mix between the borrowing and the bonds which we have. And, in 2021, when we started this also, the market was a little bit not keen about the sectors. So we have to diversify our source of funding. So from there, we have taken the initiative and the company success in it. And I think we are the first company, that's Taageer Finance, where we have a dedicated treasury departments. It was not a practice in the leasing sector. And we started that, and alhamdulillah, in the last 3 years, we success in it. And today, I can say the rate is on the deposit side, it's almost same. Maybe the bond a little bit higher, but the bond also, it is strict to the time, also 2 years or 3 years, while the deposit not. And I believe the rate which we are getting is today from the deposit, it is a preference rate. Maybe it's equal or less sometime also from the bank's borrowing.
Okay. I just wanted to check in terms of your lending rate, it's probably one of the highest in this sector. And given that you have a growing book, I think you've grown the second fastest in the sector compared to the other players. How do you sort of see risk evolving with regards to a growing book and a high cost of funding and equivalent high cost of lending? If you could or lending rate, if you could just give us your thoughts on that, or the prevalent risk in the system, how you've seen that evolving on the ground in terms of cash flow from your clients, recoveries. If you could just touch upon that, please.
Yeah, in the sectors, when we talk about the leasing in Oman, the leasing is there. It's exists for last more than 30 years or 35 years. And the market which we touch normally or we follow or we attract, it's the initiative, the whole startup businesses. We do understand the risk. But again, we evaluate the risk very well there. And if you see the portfolio of Taageer also, it is, I can say that it is a stagnant. The things been concerned from the angle of provisioning, we are trying to make more coverage to cover the futures unforeseen things. At the same time, when we are evaluating the credit also of our SME commercial, when we talk about the corporate here, let's please try and understand one thing. Majority of our commercial businesses at very small tickets, and that's why that's give us the room to diversify the risk even, because if you see the average ticket size in the commercial side, it's less than 17,000 riyal, while in the retail it is less than 7,000 riyal. So this type of mix allowed us to write or to take higher risk. And in the sector also, you will see us, there are companies which are writing a very, I call them a traditional risk takers. NFC is there, Taageer is there as a traditional leasing company we are working. And there are a company who are working as a unique company. They are there and they are special company also doing the evaluation of the risk or the credit in different matter. So here also we have to look what we did, let's talk about number 1 and 2 today. If the growth with the NFC is at a level of 10% and Taageer maybe close to 5% in the current year, these are the 2 active companies to the market. And still there is a room. The portfolio is more than 1 billion riyal in the market. I believe there's a big room still for us all to write a business, and especially for the top 2 companies, because we keep writing the business. Now, again, I'll go back to your area of the risk. Yes, the risk is there. It's diversified, but the number of transactions which we are writing, maybe we are executing more than 1,000 contracts per month. So that's why the risk is, we call it, being diversified, and it's been steady also with us. The team, mashallah, there is a good team who is studying and evaluating the risk. The legal system also It's working closely. It's to the clients. It's our aim is not that to go and arrest everybody who defaulted, but we solve their issues also and give them ways to get them out of it. And I think this is the aim also what the country is looking for. The country want to develop the SMEs, and the SMEs, I believe today, no support to the SME sector rather than the finance company. If we have a portfolio of 1 billion or 1.2 billion today in the market, 90% of this portfolio, it is with the SME in Oman, and these are the SME where the future commercial or corporate entity will be, inshallah.
All right, no, thank you for that answer. Now, if I may talk on the risk side, your gross NPL ratio is at 18%. It's been at that level for the last 4 years. And the cost of risk is among the highest in the sector, at least as a percentage. So what would be an aspirational cost of risk number? Do you see it going down to the 140, 150 BIP levels that we noticed in 2020 and 21 pre-COVID? If you could just comment on that.
If we are talking about the current infected rate or the current NPA rate, there are two things, which is one is when we said about overall the infected rate, which is close to 17% in the company, and we have also the NPA, which we call it minus the provision, which will be about 9%. In this type of business, if you have a risk of 9%, I don't think it's a big, because again, you see your future income and your steady income, which is there, we call it unearned income in the company. If you have a portfolio of 370 millions and you have about 117 million riyal unearned income, I'm sure you can analyze that. You can see that how the future's income still will be there for the company to cover any I call it any unforeseen accident if it's happened. But again, because our ticket size also it's very small and the number of default is not heavy now. Whatever was there, I agree with you prior. During the COVID, and there was a big hit. We got it everyone, but we try to correct our book. That's why our provisioning coverage, if you look into it today, which was our aim last year to achieve 70%, today we crossed 72% in the coverage ratio. And I hope that by this year end, the company will achieve the 75% coverage ratio. And sometime within the next 3 to 5 years, maybe we go to that position, which is a wishes. We have a big wish list in the side, and maybe we will have that 100%, inshallah.
Just add to what CEO has said, Mission, that the risk ratio, when it was 5%, at that point in time, the provision coverage was 54%. So this is a unique situation whereby we have not only increased the risk ratio, which is now around 2.3%, but we have increased the EPS also. So if you see that at that point in time, the EPS was 10%, and right now the EPS is 16%. So please don't, we can't look this risk ratio in isolation. We have to see two other things. One is the provision coverage, another is the EPS also.
I completely agree with you. In fact, I'm looking at it from the other point of view. I'm saying for a company that's doing so well, has a growing book, has a reasonable spread, and is adding value, what happens when the cost of risk reverts to the sort of, let's say, pre-COVID levels? I see further upside there. So I'm coming from a different perspective. I'm looking from the perspective where I see further upside once your cost of risk normalizes to, let's say, your historic average or to at least what the sector reports. Now, I understand sector average would not be meaningful because each company has a different strategy. But just given by what you've done in the past, if it reverts back to those levels, I see further upside. So I'm coming from that perspective, if that makes sense.
Absolutely.
Yeah, thank you.
Right. And just, one final sort of comment / query is, if I look at the ROEs, historically, I'm talking of pre-COVID and let's say when things were better for the sector, we witnessed the 12 to 13% ROE, for the company in, let's say, 17, 18. We've seen a company come a long way, did extremely well last year. Second quarter was also very good. Do you see a double-digit ROE, let's say, in the next year and a half, 2 years, especially once deposit rates fall? Or how do you see that evolving? Again, I understand, not in terms of a number, but an aspirational sort of guidance.
Yes, it's for sure, inshallah. In the upcoming years, it will be double digits.
Inshallah, great. And in terms of, you mentioned, how you build provision coverage from the 50 levels to 70 and inshallah, we'll touch 75% by year end. That would also directly link with the dividend payment as per CBO guidelines, right? The closer you inch to 80% and 100%, the ability for a higher payout ratio also increases for the company. I understand the shareholder decision, but at least in terms of being able to pay a higher percentage, that option is also available, right?
Yes, yes. Because
Great.
CBO didn't put any ceiling for the provisioning coverage ratio, but there are something which is accepted. Let's say there are some standards also when we are doing these calculations. So we don't see anything from Central Bank of Oman for last 2-3 years when we went for payout of the dividends. They are satisfied with what we exercised in the past 2 years or 3 years from the provisioning angles. And therefore, we are getting it. And I'm sure the company also with the current strategy where, inshallah, we are going to improve it further. Because again, this is important to the lenders. As you know, our borrowing, if you see more than 200 million, it's coming from the markets. So it's a concern by our lenders. That's why also we want to satisfy our lenders when we approach them or whenever we approach them for funding. So one of their major area which they look into it is the provisioning coverage ratio. Because today, the market is small, and I'm sure you know that the financial sector in Oman, when we talk about the banks, almost they are close to 90 or above 100, some of them. So the ideal is that, yes, 100% is the excellent ratio. Above 90, anything, it's excellent. But inshallah, Taageer, I think within the next 3 years, the way it's going, it can pay good dividends to the shareholders. At the same time, they can create a very healthy let's say, provision for the company, inshallah. And this will continue. The strategy will continue as it is.
Great. And last question is, the bonds that mature in November of this year for 14.6 million, you would look to replace them with a similar product to sort of maintain the diversified mix of funding?
No, see, in Taageer, this is, I think, also a unique. Here we are unique. If you remember, when we started the first one, we also provided a sinking fund, we call it for it. So we show also when Mr. Kashif was running the presentation, we have a cash balance of 18 million. So the payment of the upcoming bond, it's already prepared. The company is prepared for it. Yes, we may go for some alternative. We are working under something which will help us in other area in a way of maybe it will come under tier 1 this time, will be different things. But that we can't disclose it today officially unless we have the full and final approval for it.
Understood. And just last accounting query, in terms of the bonds that you've issued, the expense comes in your interest expense right at the top, right? Before you part of your operating profit.
Yes.
Okay. And the tier 1 would obviously then not be reported. That one has to subtract separately.
Yes.
That's fine.
Please.
Just want to check that. Gentlemen, thank you so much. Wish you all the best and look forward to interacting on the next call.
We have 2 questions from the chat.
Yeah.
I'll read the first question. What is the service which rise the revenue more than others, and why this service specially?
So we have a number of products also. We have last year also we launched to our retail businesses a product where it was for the retail customers. That's a loyalty, let's say, schemes. And this year also we launched it for our SME and commercial businesses. And maybe the main things how we are differentiate ourselves from others, it is the services. Again, the service, when we talk about the network, about the branches, about the approval, the fast approvals, the customers need, the clients who are existing customer, whenever the need come for them, they feel that Taageer door is open for them, like when they want to top up, when they want to reinstate, we are there. At the same time, also a market known today, that's the legal and the special asset management function in the company and the collection. They always get solutions also for the client. It's not that heavily and we want to damage the customer who's in default. No. Also, there's a solution. So Taageer build up a name, I call it. And the market today knows us especially on the SME and the commercial side. They can get their need from Taageer's doors with a faster than if they go to another financial institute. And that's why we are able also to have a premium or some charges on it.
Okay, so the second question is, through knowing your customer satisfaction, where do you see the company position after 3 years?
The company position after 3 years, inshallah, if the things which are in pipeline, if it's go through, the company today position itself as number 2, and I'm sure if the things went through, yeah, and it will be much closer to number 1. The gap right now it's big, but maybe we will be there, or maybe Taageer will be number 1 if the things went through, inshallah, the way we are planning currently. Thank you.
Any other questions?
Yeah, one final question. If you could just comment on recoveries, because we've seen your net provision. If you could just talk of how you've witnessed recoveries and what your thoughts on the same are.
I mean, how the team is operating?
How you've seen sort of recover in terms of, has that number gone up significantly because we've seen the economic situation improve? So how, as Taageer Finance, do you view recoveries from clients or the restructured book and how that's evolving? If you could just talk about that.
Now, when you talk about the recovery or the collections team, first of all, to explain a little bit wider for you in the company, the structures of the recovery team itself, it is into 3 phases. Let's say the retail is separate, the commercial is separate, the collection team or the recovery. And we have, we have the special asset management, because where it's the legals. And always, I mean, the clients also, when they start in difficulties or they are going through some difficult time, they approach the company, they sit and they let's say, restructures the accounts if they want to restructure it. But definitely the ECL model and the other will be considered. So the last is to approach through the legal system. First is the contact. I think it's much easier with the client because the network of the collection team, it's been spread among all the branches. In each branch, there are 2, 3 DCs and team leaders of collection sitting there to solve the issues and give the way out or way of correction, we call it, at the initial stage for the client before they go into NPA or before they default heavily. So maybe that is one of the area we are different than the others in the market.
Okay, no, I just want to check on that. Thank you so much.
Thank you very much for everyone. Thanks for the team also. Thanks. Salam wa rahmatullahi wa barakatuh.